Welcome to the Retire with Peace podcast, the podcast where we help you create a fulfilling and stress-free retirement. Each week, we bring you expert advice, practical tips, and inspiring stories to help you plan and live your best retirement life. Whether you're nearing retirement or already enjoying your golden years, this podcast is here to support you every step of the way. Let's embark on this journey together and discover how to retire with peace.
Welcome back to the Retire with Peace podcast. As always, I'm your host, Dave Zaegel, and this episode is sponsored by CWOs for Hire, which is the financial planning firm that I co-own. It's coming up on that time of year when we start to get a lot of inquiries, a lot of people needing help as we turn the page and head into a new year. So if you are needing help with planning or looking at your taxes or investments or just your overall retirement, please feel free to reach out to us. We'd be happy to have a conversation with you. I've been getting a lot of questions lately on cryptocurrencies, and I don't think we've ever talked about specific assets on this show. I could be wrong, but generally we've stayed at a higher level talking about investment types. And I guess maybe this falls into an investment type, so maybe there's some gray area there. But wanted to address cryptocurrencies because there's been a lot going on and a lot of questions being thrown out there, a lot of misunderstandings being thrown out there, just all sorts of confusion on what is this, what should we do with it? And it's had a relatively short history if we look back at the past decade or so, roughly. I can't remember what year Bitcoin was started. It was probably about 15 years ago, roughly, I would guess. I learned about it around 10 years ago. It was interesting. I was working with a group of people. So I have an accounting background, and they were looking for somebody to help put together some of their financial information and presentations to investors, dealing with things like that. So I was working with them, and it didn't go very far, but it was interesting to learn about. They were putting together a platform on the blockchain, because that's, I guess, to back up a little bit. So Bitcoin is the currency for a blockchain development, which is essentially a public ledger for information sharing. And that is a very, very simplified explanation, but I don't want to get too into the weeds there. But they were developing a system where they could, on the blockchain, be able to transfer cash internationally. And specifically, they were looking at students and figuring out how can they transfer money, or how could their parents even transfer money from overseas to the U.S. while they were at school, because international payment transfers still to this day are a bit of a pain and kind of expensive. So they were looking at how can we use the blockchain and Bitcoin to be able to make these international transfers much faster and much cheaper. And a lot has developed over the past 10 years in that regard. But it was interesting to learn about it back then. But back then, Bitcoin itself wasn't as heavy of a focus as the blockchain technology was. Now, fast forward 10 years, and Bitcoin itself has done quite well in terms of the value that it has gained over time. It's been a wild ride, but one that has produced a ton of value for people who bought Bitcoin early. Unfortunately, I was not one of them. I was not focused on the Bitcoin as much as the blockchain itself. So it's had quite an evolution in a short period of time. And now, for the first time ever, there is a president and a regulatory regime that might be more friendly to it when that happens. We're about a month out from President Trump becoming president, and like I said, just a more favorable administration. Previously, it had been looked at as Bitcoin and these other cryptocurrencies are here to ruin the company and take over the dollar. We don't know what's going to happen in the future with it, but that is certainly not the intent of these cryptocurrencies. I think it's more just a protection against things going poorly, whether it's in the country or around the world. And it's also still a means for exchanging money internationally and also just within any country. So some people will say it's a store of value. Some people will talk more about the ease of transactions. Some will talk about being a protection against things happening both in the country and internationally. So there's a lot of different varying views of this. But From an investment standpoint, there's no denying that it's done quite well the past 10 years. So now what do? It's out there, it's becoming more prevalent. We're going to have an administration that is more favorable towards it for the first time ever, which was even a switch from their stance 4 years ago. So it's been an interesting change and evolution in these cryptocurrencies over the past several years, especially. So for retirement specifically, should we or should we not be looking at cryptocurrencies and even more specifically Bitcoin? My take, and this is, I have to preface this since I operate as a financial planner as well. I have to give all the legal disclaimers of this is not investment advice, consult your financial planner, yada, yada. But my view is that cryptocurrency can be used as part of your retirement, but it does not have to be used. And I'll clarify a little bit why I think that's the case. I view these cryptocurrencies as something that can grow quite well and have a lot of potential over the long term, which can always help in retirement because we talk about setting up different buckets in retirement based on your time frame, where we want at least 5 years that is in bonds, cash, CDs, something really, really safe to give you that guaranteed income. And we want the rest to be focused on more growth and more long term. So in that bucket that's more growth than long term, there's no harm in having a piece of that, not all of it, but a piece of it in something that is either considered more speculative or something that's just different. Because that different, or that something that might be a little bit more speculative or uncertain, could produce a higher gain for you over the long term. And if it doesn't, as long as we can keep that in proportion and not have it be too big of a piece of the pie, then we're not at risk of that somehow ruining our retirement long term. So you can absolutely add a piece of crypto or Bitcoin to that long-term holdings if that's something you're interested in doing. Now, the reason I'd say that you don't have to do that is that I think there's a view of some people, not everybody, obviously. Some people hate cryptocurrencies. Some people love them and will tell you that's all you should be investing in. I don't know that either one's really necessarily the best answer. But the point being, you don't have to have these cryptocurrencies because there are other investments that can do as well, likely, as these cryptocurrencies. And maybe that'll be proven wrong. Maybe cryptocurrencies will be the best investment over the next 10 to 20 years. But even saying the best investment comes with a little bit of subjectiveness, and there also could be lots of different smaller investments that do even better. But you have to take risks and returns in at the same time. You can't just evaluate things in a silo or in a vacuum. So the point being, as we look even at the past year and how well Bitcoin has done in terms of appreciating in value, it's been a fantastic year for it. But I can list off a number of other different stocks and companies that have done just as well, if not better. So it's not an either or do I not have any or do I have a ton of it? If you want to have some, keep it in that small proportion. If you don't want to have any, then don't. You don't have to have it. There are other investments that can do just as well or better over the long term. So that is the summary for today, which is if you love it and you want to have some, go for it. Make sure it's in a small proportion to your overall long-term growth bucket. So that way it can't hurt you if it does, for some reason, collapse. Who knows what will happen in the future? But if you have a small piece in there and it does really, really well, that can help benefit you over the long term. But again, you don't have to have it. It's not an absolute must-have, at least not in this point, unless something just crazy happens in the coming years and all the people who are holding on to Bitcoin because they think the world will collapse. If they're correct, well, then yeah, maybe you should have some. But until we start seeing a little bit more evidence of that that's solid, I will not say that you have to have it. I will say it might be nice to have as a small piece of that growth, but it's not absolutely required. There's lots of different things that you can be investing in. We've had a ton of different investments with big gains, especially this past year in 2024. So again, don't feel like you have to have it, but there's also no harm in having a small piece of that in your growth bucket.